What's up, everyone? It's Scotty with Money Investing. We've got a big week on our hands because not only do we have earnings getting started with some banks reporting towards the end of the week, but we also have the big inflation week as well as retail sales, consumer sentiment. It's going to be a packed week for the market, and of course we're approaching a very critical area of resistance both for the S&P and the NASDAQ as well. So in this video I'm going to break down everything you need to know for the upcoming week. As always, if you enjoyed this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time, and the link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, all the member benefits, including private videos and everything else as well. And don't forget the fundamental and technical analysis courses. The bundle right now is currently 60% off in observance of Easter, and that does expire tomorrow after Easter is over. So the coupon code is going to be Easter if you want to take advantage of that as well. So first things first, let's just quickly break down the earnings. So this is what the earnings calendar looks like. And again, we don't have a lot of companies reporting Monday, Tuesday, Wednesday, but the real fun begins on Thursday and on Friday, more specifically when banks start reporting their numbers. So we do have Delta and Progressive reporting pre-market on Thursday. And then we've got the big companies. We got JP Morgan, we got Citigroup, we got Wells Fargo, we got BlackRock and PNC reporting their numbers. And banks are usually the first ones to kick off this earnings season. They usually are almost always the first ones to kick off an earnings season. And here we go. We are getting started, folks. So it is going to get quite interesting what these earnings are going to look like and what the guidance is going to look like, because 2023, as we know, is going to unfold with a potential turbulent time, with a potential recession as well. So that's going to be very, very important. So this right here is going to be the economic calendar. So April 12th, Wednesday, is inflation, CPI month over month, CPI year over year, core month over month, and core year over year comes out. And the expectation right now is for core to increase by 0.4% month over month, and year over year to actually tick higher at 5.6%, with CPI year over year to now sit below the core number. So the expectation is for it to come down from 6 to 5.2%, and for core to go up from 5.5 to 5.6%. So this was the previous number. So you can see how headline CPI was higher than core, and now the expectation is for core to actually be higher than CPI because of the other items, because core excludes for food and energy. So that is one of the reasons why we are expecting core to be a little bit higher, and CPI, because of prices coming down for energy, it's going to weigh on energy. It's going to weigh on the headline CPI a little bit more and result in the overall headline inflation to come down. So crude oil inventories are also expected to come out. We've already heard from OPEC plus nations that they are going to be reducing supply by about 1.16 million barrels in the middle of April, I believe, and they are going to continue that towards the end of the year. We've also got FOMC meeting minutes, so that comes out at 2 p.m. Eastern. So that is also scheduled to come out on Wednesday, April 12th. And that's definitely going to be a market moving event because it's going to give us a little more insight into what was discussed in the previous meeting. And then not to mention, we've got PPI, so that's a producer price index, coming out on Thursday, April 13th. So core PPI and PPI, the expectations are for us to see an increase of 0.2% and 0.1% respectively. And of course, initial jobless claims, which have been on the rise, and they have been increasing on a week over week basis. Most recently, we came in once again much higher than what the expectations were, and the prior week number was also revised pretty substantially back over 240,000. This right here is going to be Friday, so we have retail sales, we've got a few members talking, we've got consumer sentiment, and we've got the import-export prices and some of the other industrial production numbers, which are also going to be very important for the market. But core retail sales expectations are for us to see a decline by 0.3%, and regular retail sales are going to also be seeing a potential decline of 0.4%. So it's going to really continue on that. So prior number was also a 0.1%, 0.4% decline. So it's going to be quite interesting whether we continue to see retail spending pull back. And if you combine retail spending down with unemployment higher, with inflation also relatively higher or relative to the Fed's target a little bit higher or elevated, that is not the best recipe for stocks to actually push higher. The environment where stocks do really, really well is an environment where the economy, the underlying economy remains very strong. There is real spending and real growth happening in the economy. That's a more sustainable path to all-time highs. A more short-term path to all-time highs is going to be, yes, recession fears, unemployment going higher, and markets expecting that the Federal Reserve is going to pull back and start cutting rates. In other words, QE is going to make the markets go higher. And there's nothing wrong with that, but it's just a very short-term momentum, because eventually what we're doing is we're kicking the can down the road, and eventually we'll have to deal with the weakening economy. So retail sales and then consumer sentiment expected to slightly increase to 62.7. And you can see that Michigan consumer expectations also coming out, and they are expected to increase by a little bit to over 60, almost 61 levels. And Michigan consumer sentiment for April also expected to increase to 62.7 at the moment. Now, talking a little bit about the market, so we are actually quite an interesting crossroads between the bulls and the bears, something that I have discussed in my previous videos. And as you can see, that we are sitting inside this red rectangle, trading roughly around 41 to 4200. Very, very important levels to watch, where we have gone rejected not once, not twice, not 3 times, not 4 times, but almost 5 times now, considering that we are starting to see a bit of a pullback from these levels for the market again. So it's going to be quite interesting for the S&P going into next week, how it prices in the new labor market report, which came out on Friday when the markets were closed, and of course inflation, consumer sentiment, initial jobless claims, earnings, lots of things to unpack here. So 41 to 4200 is going to be that support. One more thing that I want to mention is that the S&P 500, I actually did a video 2 years ago, right? And we talked about the 50 EMA for the market. And what you'll notice is that the S&P 500 has a very good support at the 50 exponential moving average. Very rarely does it break down below that level. So you can see that back in 2011, we briefly broke down below that 50 EMA. And this right here, the 21 EMA, and there was another one. Let me just bring up the 200 or the 200 SMA. So you can see that we broke down below the 50 EMA, but we validated that 200 SMA a couple times, and then we rallied back up. But then since we have perfectly validated that 50 exponential moving average for the S&P, once over here, twice over here, and over here, you can see that once again during COVID, we broke down below this level, and then we immediately recovered back up because of a lot of quantitative easing. So right now, you can see the S&P 500 perfectly from top to bottom came down to that 50 EMA, 28% decline, and bounced right back up, and now we're starting to go sideways. So it's gonna be quite important for us to make sure that we understand that 50 EMA is a very important support. The moment we break down below this level is actually gonna be quite bearish, technically speaking, for the market. If you're able to stay above this level for longer, and if things improve, that's really good, because it gives us the opportunity for us to accumulate as things are improving underneath, and then eventually for the markets to move back up and reflect the improving conditions in their pricing, and potentially get back up to all-time highs at 4,800 to as much as 5,000. So that 50 EMA is going to be the one to watch at 3,700. Very, very important level, because as you can see, that every single time we've come down to that level, we've bounced right back up. And so that is also what we have done more recently. Talking about the NASDAQ, almost an identical chart, except we have broken down below the 50 EMA, and then we have recovered right back up. So we are a little bit indecisive for the NASDAQ. You can see the perfect validation once, twice, 3 times, 4 times, 5 times. Even during COVID, it has not breached that level, unless it was the dot-com bubble or the great financial crisis, the housing bubble. And in both instances, we broke down below the 50 EMA. We came down either to the 200 SMA or to the 300 simple moving average. So right now we're just consolidating sideways, and it's been very much of an indecisive market with a lot of consolidation. So same thing applies for the NASDAQ as well, where we have a range within which we've been trading at, and this is the resistance for the NASDAQ for us to watch, and that's going to be roughly around 12,000 or 12,280 points, kind of in line with this red rectangle for the NASDAQ. If you do get a breakout past this level, great. That's going to be bullish in the short term, and the next level is going to be 13,215 for the NASDAQ to watch. So this right here is going to be that next level to pay attention to, and of course, support level is going to stay put at this higher low, all the way down to as low as 10,000 points for the NASDAQ. So hope you guys enjoyed this video and a complete update on what is coming up. It's going to be quite an interesting week. Let me know your thoughts down in the comment section below. Do you expect the markets to break out or get rejected? As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. I think there's only 2 spots left if you want to take advantage of that early bird investor discount on an annual basis. And don't forget the fundamental and tech analysis courses, the bundle. The coupon code Easter does expire tomorrow after Easter is over. So it's the biggest sale of the year. Take advantage of it while it's here. As always, happy investing. I'll see you all in the next video.